these are just a few examples that I think it would be helpful, because whoever leaves tonight, I hope that they they get to at least learn one very effective indicator, because honestly, sometimes that's all you need. Um, and we'll go ahead and talk about how you and me discuss this issue of sometimes using more than um, needed indicators, where you just end up being confused, and you don't trade as good as you probably could have using a couple indicators and using them very good. So there's a saying that says highlight what you're good at, and stop worrying about the stuff you're not so good at. So this would be one way of um, testing this strategy. uh, a few things only, two, three things maximum, and just get very good at it, and see if that might be more uh, rewarding in the trading for you. Everyone's different, but I feel like given that 90% of day traders, so they say, are not successful, maybe there is an issue in that area of needing to always have so many indicators, and it might work for a few people, it doesn't work for some. So sometimes I just take random screenshots of something that I like, and I like to keep it in my files just to remind me how much I like a certain indicator. You can go ahead with the next one, actually, because yeah. So for example, this one is Apple chart from yesterday. It's a 5-minute chart, and so what I want to talk to everyone about is my favorite indicator. Of course, I have definitely a top three, and I could talk about all three of them, but I want someone to leave knowing one indicator really well, instead of having to just hear a bunch of stuff and don't remember it. So let's just, for me, while I'm talking, I want to cover moving averages. And the normal moving averages that people use across the board usually are 5 moving average, a very important one of the most popular ones. And then there is the 20 moving average, a 50 moving average, and 200 moving average. Of course, you can also have a 100 moving average, and so on. But if you had to pick four, those are the ones I would recommend. And the 200 moving average are great for traders. It's probably the strongest support of all the moving averages, because big money and people who are more experienced with capital, who are willing to really just come in, get out with one person, not risk much. When there's a pullback on a 200 moving average, whether it's if they're a day trader, they'll use it on a 5-minute chart, on a 50-minute chart. If they are the swing traders, they'll definitely buy on that 200 moving average. So I mean, by definitely, obviously, if there was a definitely, Warren Buffett would be even much richer than he is, There, by that, we'd have to say like a very high probability, and those are the kind of trades we want to be in. So that's your 200 moving average. And the 5 moving average is on the other side of the spectrum, the fastest moving average usually. Um, no one uses anything less than that, you know. So the 5 moving average can be used for um, two things. One, if you're having a stock, on a very good run, and it's pretty much holding 5 moving average through its run, you have no reason to take profit. You have no reason to, um, think otherwise. Everything's going well, and it also can be used for someone like an early short who um, would use 5 minute candle closing below a five moving average. Of course, that makes it that much riskier because it's a very short term moving average. But some early short scalpers use the break of five moving averages. So right now, I only explained what they act as supports and which ones are important. But I do want to highlight something that's usually it's one of the best ways to use a moving average, and it's so overlooked and undertaught, and that would be the crosses between the moving averages and also the slope. So those two things. So if you thought moving averages were used to be great previously for support, this is 100 times more confirmation, and a lot more probable to know what your trend is. So the crosses and the slopes tell you more about the trend. So now you add using moving averages as support, like I said earlier, and then now you can tell trends with it. So if you just have moving averages on your chart, that means that you literally are good to go because we got support resistance and we got the trend. And Erica, if there is something you want to say before I show this couple example. Okay. So this is just a good example of the SPY today on the 5 minute chart. Another beauty of having uh, this indicator, the moving average crosses and slopes, is that you can use it on almost all time frames. On 5 minute, if you're an intraday day trader, on daily chart, if you're a swing trader, um, to look out for it. And if you're just a badass and you want to use it to really know the trend of a stock, you can refer to the daily chart, see if you see a cross up for a bullish indicator. And then also, if the slope is up, that's also a bullish indicator. So you can also use that, just double whammy your intraday trade by looking at the 5 minute chart, and then if there's a confirmation on the daily chart. So let me tell you what the cross is. Right now, there's a green arrow you see on the screen from just the 5 minute chart today. It happened right before pre-market. And you see there's a cross up between the 5 moving average and the 50 moving average. The colors might not be very apparent, but the 5 moving average is blue and the yellow is the 50 moving average. And whenever 55. A stock has
it's a
55. Yeah, I say 50. Yeah, I go with 55 myself all the time. And I actually use EMA. It's just a little bit smoother, and I like to get in a little earlier. I don't want to get in too early, but not too late either. So I use 55, for instance. But when I have these discussions, like somebody might trip up, be like, "Oh my God, I use 50." No, 50 is the legit one. Like you can always, after some time, just um, tweak it your way. But the general one is the 5 and the 50. So this would have been a great place to get in. This cross up we have right before pre-market this morning on SPY. And we had the 5 moving average crossing up, which is the fast moving average. 5 moving average is the fast moving average. It's crossing up and going through 50 moving average, another slow moving average. So 50, 200 are considered slow. 5, 10 are fast, but everything is relative, but generally speaking, that's obviously how it goes. So given that this is a wonderful indicator of support, if you enter there, you can just put your stop loss right below that cross. Like maybe, so this is also a way to get into a trade with confirmation, with less risk. There, some people say that you get less of a reward in trades where you have to wait for a confirmation, but there's two factors. Like, first of all, you protect your loss. So we know in trading the most important is like your capital and not having a loss. So confirmations are usually less risky, and they say it's less reward, but I think at the end of the month, at the end of the day, at the end of the week, uh, it's definitely more reward. It might just seem for that moment because of the loss that you won't take. And usually these indicators that I'm mentioning right now, these crosses, they're there to catch the big moves. This is why I like them, because you can just relax through the day, go in and put your stop loss right under it and catch the big moves. They can be, they're mainly reversal indicators when they're crossing up. And more so, whoever is looking at this 5 minute chart from today, you can see um, there's another way to get out of a trade is when the fast moving average, like the 5 minute moving average, crosses down with the 50 moving average, which is right now in the yellow. As you see, the reason this trend kept up all day long is because we never had that cross. The blue line never crossed down the 50 moving average line. So why shouldn't it stay up? Like, the big money knows there's no weakness here. And so on that note, that's, when you're trying to short, you can use this indicator when when it crosses down, when the moving average, 5 moving average crosses down with the 50. And the other thing on moving averages that I can say, because I feel like I'm probably going on too long, is the slope. So, on the green arrow, you see the slope is up. We all know what the slope is. You don't need to know MA plus B, whatever the heck we know. Like, you don't need to know formula. You can look at it. The slope is up. No reason to be worried when you're in this trade. Okay? And then you will see, like, there's a little slope down when it's like topping but holding, but that's why you use the other indicator alongside. You always want to see slope cross. So, like, for instance, on top there's a little bit of a slope change, but that's completely normal. As long as there's no cross, there's no reason to even take profit.
Okay. And let me ask you, when you're trading small caps, I know you changed your strategy a little bit. Do you still use the same EMAs?
Yeah.
Okay.
Yeah, great question, because it's amazing how it works for anything you're trading. It just shows strength and weakness. So I'm coming back to small cap next week. I promise this time, I mean it. So, I'm having way too much bias for a while in the market. And as a trader, this is a strength to know when you're having bias. And um, you learn over the years that it's only you and you in the market. So uh, you got to be aware and you got to act on it. So it's been something I've been wanting to do for the past 2 months, but I haven't acted on it. But you can take my word, there's way too much bias. i'm gonna put I'm gonna put one account that only deals with some very extreme option, uh, far date. So I don't, feel like very FOMO in case there's a market crash or like a melt up. So um, that's the beauty of being able to have multiple accounts. doesn't mean you have to have all of them at so high of a capital. No, like it really helps when you sort of mentally isolate your mind from wanting something to move a certain way, looking at a position, like I can close that account that I want to swing my options, and then do whatever I've decided to adapt to in this market, which is going to be small caps. Yes, it works for different time frames, different markets, and this is why I love it, because it can really be a standalone
Mm-hmm. And it's,
indicator.
but it's important that people don't become too um, reliant upon their indicators as well, because these are just tools. Nothing is foolproof or anything like that. I think I agree with you that most people use the 200 simple moving average or exponential moving average, and people also like to use the 50 as well. I do know that in particularly scalping small caps, one of the tools that um, I used to use, because I don't really trade small caps anymore, is the 9 EMA. When you have a break to a new high on a runner, that first pullback will often pull back to the 9 EMA to provide you a quick scalp bounce. So that's another one to use as well. Um, Aria,
That's a good one.
huh?
That's a very good one, especially for a scalper who wants to be in and out. If someone has the discipline to do that, but otherwise, the 20 moving average is another one on an uptrend where it doesn't. It's safer. The lower you go, the safer it is. But if you're in a runner, you want to catch the quick scalp. Like I personally don't have the guts to do 9. Like I would gladly do 20.
Mm-hmm. So what I just pulled up is my Thinkorswim. I went through. Hang on, someone like unmuted themselves. Guys, if you can please put your mic on mute if you're not like asking a question or talking, because I can't hear or think. Okay, so I pulled up TOS. They're doing maintenance, so it might go down. Anyway, I cleared the chart and I just added two of the most commonly used indicators besides the moving averages that we talked about, which is VWAP and then RSI. Another thing that is obviously crucial is volume. A lot of people don't really think of that as an indicator, but volume is such a powerful tool. You can, for example, kind of a good rule of thumb is if something is going up on low volume, the easier it is for the other side to knock down. And the opposite is true as well. So the lower volume that you have a pullback on, the easier it is for the bulls to knock the bears out. Is kind of like to put it in simpler terms. So volume is a very powerful tool,
Wow.
Who's that?
right? Let's
That's
see.
actually very good. I love that. Good job, Erica. That's something I don't use as often because I have felt like I use too many indicators and I don't pay too much attention to it anymore. But I used to a lot, and especially when I come back to small caps, that's going to be a huge one to follow.
Mm-hmm. And I think that a lot of people too like to look at the RSI to see if something is oversold or overbought. I personally don't really use indicators. I use volume, and then I do keep VWAP on my chart for the following purpose. I keep VWAP on my chart because it helps me to know where the other side of my trade is looking at. So a lot of retail traders like to rely on VWAP. And if I'm going long, it's important to remember that a lot of shorts look to attack something at VWAP. They don't want it to get above VWAP, or they will wait for that pullback to VWAP and try to trap longs when they think it's going to bounce from there, and they will knock it back down further. So VWAP is kind of like one of those psychological tools for me, if that makes
Exactly.
sense.
VVAP is a great one. Especially even you can use it as a benefit if you are shorting, because the times that you're mentioning where it fails a VWAP, it's usually because you're in a downtrend, and it's a very easy line. You can draw yourself like from morning, all the way down. There's going to be, what a downtrend obviously looks like.
Mm-hmm.
There's going to be peaks lower and lower, and what it does is when it tries to pretend it's reversing, but it fails that VWAP. Or some people, I use my 55 or 50 moving average because, again, I feel like it's a smoother one, and I already have so many indicators. So it's the same, exactly. It's a wonderful one you're talking about, because you can use that to just get a better price. You're trying to short a stock that you know it's going to be a toxic spiral down, and you don't want to short it mid. You don't want to get kicked out. This is the importance of these main indicators, is that it'll help you not become a bag holder or get kicked out of a trade too early, and to catch a trade with confirmation. So yes, so Erica, I'm sure like that. You agree with the,
Mm-hmm.
that's when you want to short, when it tries to go over, but it's not, because it's in a very severe downtrend.
Yeah. I mean, what I probably rely on more than anything else is, um, I know you guys can probably see in this screen share right here, this giant gray rectangle. This was particularly, it was a demand zone for SPY. And I always go through on whatever ticker I'm trading, and I identify different support and resistance levels. And then I also put price levels on gaps in the chart. I think one of the most powerful tools is our support and resistance, supply and demand. But another thing too is actually looking at the longer time frame of a stock before deciding to get into it, and really see what direction it's moving in. So I don't know, give me like any stock example, like small cap, large cap, I don't care.
um, okay, PLRY, just because
Wait,
I know.
what one?
Just the wheat stock, TLRY. Do you
Oh,
want to do?
Tilray.
Good
Uh, Tilray, maybe. Okay, so Tilray's. Hang on, I have to mute someone else now. Okay. All right. Anyway, um, Tilray. Um, I haven't actively day traded Tilray in a while now, so I probably have some old. Yeah, I have old trend lines there. So you wanna, if you look at Tilray right here, that trend line was a very powerful downward trend line, and then it started holding it on the daily chart around, what is that, July 29th. It is still trending downward, but you see how it's holding it as support. So you use your trend lines to identify direction in a stock. This is, wow, this is an old one. You couldn't have given me a stock I didn't draw on yet.
I mean, I'll give you Apple, but you probably have drawings on there
Oh
too.
my god.
Not as
Okay.
much.
Give me a
But
small cap. What's a small
you
cap?
want a small cap?
What's
Uh,
Oh, look, Michael Burry is here. What's the number to call
yes.
in and
What
ask
about weight?
questions? 1-800 only fans. Um okay, what's a shitty small cap? What, like, Give me one. Oh my God, the worst small cap in the world. One of the worst ones. Ship. Okay.
Oh my gosh, that's I don't even know if you can get the chart out of that because it's always in such a severe downtrend.
Okay, so this is my point here. Okay, guys, what the hell can we see in this chart? Let me tell you,
Oh
it's
my!
garbage.
If you have
Look at
not,
that.
if you've been a victim of SIP
If
and
you've been a
try,
victim of
like, let me
shit,
just say, it's
you should be
okay.
entitled to financial compensation.
I've been there. So just get out for sure, unless you're like a super professional trader, way better than me. Like, people who do this are like people that know exactly what they're doing with a lot of money who move the stock. Otherwise, put your money in better use,
Yeah, I mean,
and you
look
don't
at
feel bad.
this. Long term, it's just a downtrending stock. There is no, you're not seeing that growth potential there. And also, they do offerings like nobody's business. So, you want to look for something like Apple. Look at that long term movement. It's a constant uptrending stock. So, you are buying a dip on an appreciating asset when you're trading something like Apple. Whereas SHIP is a constant depreciating asset. It's like you went and, like, instead of getting a lease, you're financing a car, but you got like screwed over on your interest rate. That's like SHIP. Okay, so you don't want to buy downtrending stocks in the long term. You always want to look at your larger time frames first, because the longer the larger time frame is going to show you the stronger supports and resistances, the stronger trends. The longer these trends have been going on, the more forceful they are. Does that make sense how I'm trying to explain it?
Yeah, absolutely.
Okay. All these little
The bigger,
lines here, by the way, are just different support and resistances that I use, as I go and trade apples. So, um, but that's just the difference of why, like,
hmm
it's harder when you're trying to, like, swing trade small caps when you're fighting against a very powerful long-term downtrend. It's harder to go up. The more that you have overhead, it's harder to fight through it, every resistance level that you have to get to.
yes, you have more longs trapped that are willing. All they're doing is waiting to get out of that with a better price. So
Mm-hmm.
when you see too many longs trapped in something, if you're holding options, you might say like, okay, this is definitely gonna have a huge reversal, but you got to be very mindful of
Hang on,
the fact
Arya.
that
I apologize for interrupting you. Trader X. Okay, what? Dear. Yes, you swing trade. We all swing trade. Use a bigger time frame on what? What is it that you would like to look at to offer your opinion? Go ahead and you can unmute yourself if you'd like to talk on the mic.
and before we get
You
him on,
use
can I
the
finish your
180
point?
day 4 hour chart for I don't understand what the
Where let me look at the chat. But to
Oh, I think
finish your
he's just
point,
yeah, go ahead.
may I just say, like,
Mhm.
toxic spirals are usually very. They also are reflected in life with friendships, with relationships. You're in a
People
horrible
on
marriage,
Discord.
like constantly just get into something terrible, try to fix it, and it just gets worse and worse. So there's such a beauty sometimes in life and in trading, because sometimes you realize, like, you look at these toxic spirals and you're like, why the heck did I get in this? Why the heck did I stay in here? I know the rules, I know what's supposed to be. And then how sometimes what we do in life reflects in our trading world. And somebody else, that doesn't make you a good or bad person. Sometimes if you're a good person, you get stuck in these types of things. So just remember, I remember one time someone told me this, like early on, like probably 6 months in my trading, and it really changed the way I looked at stuff. They said, would you ever hear Apple say they're having a reverse split? Would you ever hear them having like these scammy S1 or different type of things to raise money? No, you don't. So when
Okay.
you
I'm
enter a
sorry.
stock,
I'm sorry to interrupt you again. This guy is clearly doesn't want to participate. Also, for anyone who's listening, I'm not your babe. I'm Aria's babe, and I'm just trying to help. We can go through bottom bounces as well. We're going through example by example. If you don't like it, by all means leave, which he did. Anyway, my love, I'm so sorry, but this guy with his comments like left and right because he doesn't like what we're saying, I guess, but won't actually get on the mic to provide opposing viewpoints. Anyway, what
which
Arya and I are trying to say here is not that like we hate trading small caps. Like that's not what we're saying. Um, I I personally I stopped trading small caps when I switched to options because I don't want to be doing a whole bunch of different styles of trading at once, especially when I'm trying to learn options, which is a very time consuming process. People make money day trading and swinging across small caps, no problem. What we're trying to say though is what to look for so you're not ending up like not having that plan before you're getting into a trade and then getting that horrible feeling of being stuck and not really knowing what's going on with that stock, if that makes sense. So, this applies
absolutely.
to whatever small caps, large caps, crypto, OTC, whatever. Um, yeah, I mean, we're not trying to say like small caps suck, but
No, not at all.
some small caps suck. I mean, like
We go
shit.
back and forth, and if there is, it's very easy to distinguish someone who's a new trader than not from comments they made. I actually haven't read it, but I have nothing against it because I've seen it all, I've done it all. Like, so, there when there's a point where when you mature, you mature. Like, so someone who would make a comment like, "Oh, why are you talking about small caps? Why are you talking about options?" Whatever that person's saying, it's never about anything. It's never about being long. It's never about being short. You're not bad to long. You're not bad to short. You're not, it's not bad to go small cap. You constantly adapt, Erica. You've said this multiple times yourself. You stand by this, So whoever even says that means like they have not matured in the market enough to understand that. Not that they're immature, but that's why it's so easy to tell, you know, when you're in it enough to tell someone who's uh, proficient and someone who's not
Yeah.
by their sayings, basically.
Want more Trader Babes? Subscribe now and connect with us on social media for exclusive content and access you won't find anywhere else. And we'll see you right here on the next unforgettable episode of Trader Babes.